The stock market just keeps going down. It's like, can you not? I mean, I guess the stock market is tanking, and I just see that and I'm like, well, I guess, it's time to buy more Palantir. And I did buy some more Palantir. I can't make a video on it every single time I buy Palantir, but I guess if you do want to know every single time I buy Palantir, you can join my Patreon. That way you'll get complete buy alerts for all my stock and crypto purchases. But that's not what we're here to talk about. But you probably should join if you're interested. We're here to talk about all the reasons why the stock market is teetering right now, why it's sitting in this place where it seems very uncertain, and we really haven't had a very good last month, almost even like 6 weeks at this point. So let's talk about all the reasons why investors and big institutions are kind of uncertain right now. And then that way you can make better decisions with your hard-earned dollars. I mean, crypto right now is in a massive bull run. There's tons of people who are up 50, 60% in one day. I mean, Dogecoin is exploding. We'll see exactly what happens there with Elon on SNL coming up this weekend. But let's get into the reasons why the stock market is teetering right now. And there really are 5 or 6 major things that I want to highlight and I want you to consider. The first one is this Biden aide. He made it sound like it wasn't certain that Jerome Powell would be nominated again. So we can see a senior White House economic aide deflected the question of whether President Joe Biden will offer Federal Reserve Chair Jerome Powell a second 4-year term, saying the decision on selecting the next central bank chief will come after a thorough process. And he also went on to say, I'm not going to get into that. Neither yes nor no at this point. And what this tells investors, especially institutions, is there is some uncertainty in the air. And if there's anything the stock market does not like, it's uncertainty. I mean, if he did lose that position and we got someone else, the next person could be better, but just the uncertainty makes the markets uneasy, makes the markets a little bit queasy, and that's a major thing that's going on. And then we can add on top of this that Janet Yellen made some comments that really concerned some investors, and then she kind of went back on those comments. So here's what she first said. She said that interest rates may have to increase somewhat in order to keep the U.S. economy from overheating. Now, that's a statement that we can all basically agree with. Basically, if they see concerns of inflation on the horizon, that's one tool in their tool belt that they have. So it's just kind of something that everyone knows. But for whatever reason, because Janet Yellen said it, a lot of people were like, does this mean that the interest rates are going to increase? And remember, Janet Yellen is not the person who decides. I mean, she used to be, but not anymore. So it's strange for her to really even comment on this at all. But her exact quote here is, it may be that interest rates will have to rise somewhat to make sure that our economy doesn't overheat, even though the additional spending is relatively small relative to the size of the economy. So again, it's a fairly benign statement. It's something that most investors should be aware of, but the markets kind of took this and ran with it, and Yellen saw the consequences of her saying that, and she actually went to clarify her remarks, kind of even saying like, hey, I shouldn't even comment on what the Fed is doing. And we can see here, she said, it's not something I'm predicting or recommending. She was more just making a blanket statement as to the cause and effect and the potential process here. People were just freaked because we've been told time and time again, expect interest rates to remain pretty darn low for the foreseeable future. We may see some temporary inflation up front, but it's not a big concern. Things will settle down. And then, in the long run, in the long horizon, we might see, some interest rates rise in the future. But don't worry. That's something that kind of bothers me with the whole inflation talk between both the Fed and the Treasury, where they're just kind of like so lackadaisical about it that it's just concerning to me whenever anyone seems to be not concerned. Whenever someone's not worried, it's like, why do you seem so confident in this? I mean, it's been an issue in the past. Why are you so sure that we have all the perfect tools now? So that's just something that is always concerning me. And then the next issue that is kind of making the U.S. stock market a little bit queasy right now is a report just came out showing that the U.S. trade gap widened to a record of $74.7 billion. And that's an increase from $70.05 billion. So that's something like a 6-7% increase in just 1 month. And the trade gap is the difference between our exports and our imports. We're importing way more than we're exporting. And this may mean that there's a little bit less confidence in the U.S. economy if that gap just keeps on widening and widening and widening. And I actually read a report just recently that showed that China's exports have increased dramatically as a result of our stimulus bills. And there's certain concerns that the stimulus bills may actually be helping out China's economy potentially more than it even helped out the US economy. But we don't want to get things too political here. Next, of course, is inflation concerns. Everyone's worried about inflation except for the Fed and the Treasury, I swear, including Warren Buffett, who kind of sounded the alarms for inflation in his annual meeting, his Berkshire Hathaway annual meeting. I wish I could have gone to that. I'm a shareholder of Berkshire Hathaway, and I've always wanted to go. I'm kicking myself for the fact that I didn't go last year because these guys are 90 years old, 90 and 97 years old, and I need to go to this meeting at least once. But anyways, he says that inflation is here. And basically everyone else says it too. But he said inflation has begun to accelerate recently due to multiple factors, including increasing demand and the struggles with some areas of the supply chain. And I thought that this was important to highlight, that the struggles with the supply chain, because the issue with inflation right now is kind of this two-pronged demon that we're seeing, where part of it is due to struggles with supply chains, meaning manufacturers don't have all the necessary pieces in order to, make their finished product. A big issue there is semiconductors. Because of that, supply of certain goods is reduced, which means prices go up. It's supply and demand, baby. And then on top of that, we have all this additional money floating around in the economy, and it's starting to swirl a little bit more. The economy is starting to heat up a little bit more. The velocity of money is picking up, but now there's a much larger supply of money, which means there's more money circulating, which means that prices can increase. So there's this double factor thing that means prices could increase. And I mean, Berkshire Hathaway owns the largest home builder in the country, and they are seeing these issues. I mean, especially with like lumber and steel right now, those prices are through the roof. Actually, one of my best investments last year was in Nucor, and that is a steel manufacturer. And boy, is that thing printing tendies. I'm almost up 100% on a steel manufacturer who's part of the S&P 500 in the last year. That was one of my best investments of all time. Maybe I'll do an entire video on that at one point. And then finally, P to E's are high. They're very high. You can see on this chart, we're at 44.24 average price to earnings ratio right now, and that puts it at the second highest ever. Right after 2009, for a very brief spike, it went up. This is almost looks like a stock squeeze. It just went up so quickly, went right back down. But we're at an average of 44.24, and a big reason for this is tech is so heavy within the S&P 500, and this is a reason why we've seen the S&P 500 be pretty darn sluggish or even slumpish, if that's even a word, in the last weeks and days, because tech is so heavy. If tech doesn't do well, the whole S&P 500 is dragged down, and also tech P to E's tend to be higher, so that drives up the average P to E for the entire S&P 500. Boy, I wish we were in a time where the average P to E was 5.3 like it was back in December 1917. Those were the good old days for investments. And then we have some things to watch out for in the coming days. So first off, today on Cinco de Mayo, ADP's employment change figures are coming out. So you want to keep an eye out for that, because this kind of helps us better determine what exactly is going on with the unemployment rate. And the new unemployment info is coming out on Friday. So you want to keep an eye on that. What's going to happen here with unemployment? This is the most important marker and what's going to affect the stock market the most out of any other indicator or any other data coming out this week. We really want to see a decrease here from 6.2% really to anything from 6.0. I think if we got in the fives, it almost would be a celebration. There probably would be some kind of small stock rally because of that. And this will also be an indication as to whether we may see additional stimulus. If it remains flat or even goes up, I think the odds of more stimulus actually increase pretty dramatically. And then one other thing to keep an eye on this week is the Bank of England's rate decision that comes out on Thursday. I don't expect anything crazy to happen there, so I wouldn't be too worried about that. But there's just, as you can see, a lot of factors that are putting the stock market on this teeter-totter point right now, and it sure will be interesting to see what exactly happens in the coming weeks. So make sure you check out the links in the description for all sorts of things. I have a YouTube course coming out very soon, so make sure you sign up for that. Grab some free stocks, grab some free crypto while you're down there. I would like to thank you for watching, and I hope you have a profitable day.